last tip number 7, consider the costs, right? Consider the costs and make sure the tax savings outweigh the additional costs you're going to incur. The reason being is that we talked about tax return filing. So now if you're an LLC, and let's say you're the only member of the LLC, you're going to be filing a Schedule C, which is part of your personal tax return. And so, maybe there is an increased cost there versus a W-2 employee, but still nonetheless, it's one tax return. When you make an S election, you now have 2 tax returns, so your tax prep costs go up. You need to have a reasonable compensation paid to yourself as an employee through a payroll service. So that payroll service is going to have a monthly fee, annual fee, whatever it is, so that's a cost. You will likely have to have unemployment insurance from your state, even on yourself. That's an added cost. And in some states, you may even need to have workers' compensation insurance. Okay, so some of the costs to consider. Now, you can still save in excess of those costs, but once again, depends on your tax situation. So I've seen, practices save over $10,000, in taxes by making the S election. However, I've also seen some practices suffer with cash flow by making it too soon. And I've seen many practices at risk of the IRS coming in and having some issues because they're not running a compliant S corporation. All right. So is it a great tax strategy? Yes, but you want to definitely not jump into it. And if you're in it already, you want to do your best to get on track and be compliant so that there's no issues in the future.